Good morning, everybody, and welcome to the Seiler Wealth Management video blog. Today is Tuesday, April 12th, and we're about 6 days from the deadline to do your taxes or to file for an extension if you're one of those bad people. We all have to do it every once in a while. Anyway, let's talk about what's happened in the market last week. Volatility has slowed down a bit. We're not seeing those big wild swings like we had been seeing. And last week, the three major averages, and I'm talking about the S&P, the Dow, and the NASDAQ, all down better than 1%, which is expected after a pretty big rally we saw in March. So far this week, yesterday, we tried to rally and then closed at the lows of the day. So things are turning around, and here's what's happening. That's why I'm a little cautious with the market. And when I say a little bit, I really truly am a little bit. I think we are pulling back, and not in a huge way, not in a bear market way, but certainly in a backing and filling type of way. When markets start to go up or down, it goes up, pulls back a little bit. If it goes down, it'll rally up a little bit. I think that the trend right now, really, we're pretty much trendless. So I think the next volume, this is an old saying we used to say back in the day, that the next volume wins. So if I see some huge volume to the downside, chances are we're going to see further downside. If by chance a couple of these companies come out with good earnings, because we are right in earnings season. It started last night with Alcoa, always traditionally the first company to report corporate earnings. They recorded first quarter earnings. The earnings beat expectations by a wide margin. However, revenue's a little bit light. I'm still doing some research and see why they beat so much with their revenues lighter than expected. And oftentimes, those are cost-cutting measures. Those are stock buybacks. There's things like that can actually boost earnings while really not growing the company organically, which I mean organically is by traditional sales, okay, or making things. So later this week, earnings are going to be plentiful in the banking sector. You'll have Citigroup, JP Morgan, Wells Fargo, Bank of America. They're all going to report this week, and we'll see how they do. Banks have been kind of quiet lately. It's because the talk of rising interest rates has subsided. So remember, financial stocks do incredibly well in a rising interest rate environment. And they started to get a little frisky a few months ago when rates started running up in anticipation of the Fed raising rates. They did. Rates came back down, meaning when I say rates, not the Fed funds rate, because when the Fed changes rates, it's there. What I'm talking about more is the Treasury, how it trades. And that's a free floating market, so it can trade up or down. And right now, the 10-year Treasury is just below 1.8, and it had been about 2.2. So rates have gone down a little bit. So that is a little concern. When rates start going up, banking sector you want to be in. And I want to be in it now because I think once rates start going up, it's a little too late. And that's the thing. You want to try and own these things. Say, I'm willing to hold it because it does pay a 3% dividend. So I'm going to hold it for a little bit, knowing that at some point rates are going to go up and the banking sector is going to make some money. And I like the regional banks as well. And I can give you some ideas there. We do own banks. I do own Wells Fargo for clients. We own regional banks in funds. So there's some really, really good opportunity out there. You're getting some good value. Let's see how the earnings come out. Now, what I'm going to see is, when I want to look at if the financials have bottomed, what we'll see is maybe, I'm looking at the screen here, seeing anything else reported, but you may see a bad earnings report on a bank, and if it ignores it and the stock stays flat or goes up, that's a sign of a bottom. Okay, so when you're seeing stocks that are getting just hammered, and then all of a sudden a bad earnings report comes out and it bounces up, that means that probably the worst is over. So that's things we look for when we're looking for bottoms. Now, a question I had, because it is tax time, and I keep saying this, and I get clients coming in every day, but the IRS has allowed you till April 18th this year, which is a week from yesterday. So what you have to do if you want to contribute to your IRA, do not come in next Monday. That is the deadline, because I can't guarantee it's going to be at their office by the time it needs to be in their office. So if you want to make an IRA contribution and potentially get a tax write-off, and I say potentially because everybody's case is different, I don't know, but likely a tax write-off for a traditional IRA, you can come in, but you got to be in here seriously by Thursday. If you have an emergency, you can't be here till Friday, that's it, but it's got to be Friday by 2 o'clock. So IRA contributions, if you're 50 and over, $6,500, and that's if you qualify, which most people do, you can take that off of your income. If you are 49 and younger, it's $5,500. That's what you can contribute to your IRA. So take advantage of that. Everybody should do it. And sometimes if you have a lot of money sitting in cash and you just roll it to your personal IRAs, basically what you're doing, you're keeping some money to yourself as opposed to giving away in tax money. And think about it. If you put $13,000 in two IRAs, husband and wife, that's $13,000 off of your income. That could save you potentially $3,000 to $4,000 in taxes. So if you say, well, I'm going to keep this money and hold it in a savings account or wherever, money market, and not contribute to an IRA, I'm basically giving them an extra $3,000 or $4,000. So think of it that way. Okay, we can do that for